Hey, what's going on YouTube? Welcome back to another video from the Growth Mindset channel. It's been a little bit since I've uploaded my last video, and in this style it's going to be pretty different from before. I actually feature two other individuals that are actually real estate investors, and so we wanted to get together and really just have a conversation about real estate in general and what was on our mind about the topic between single family and multifamily deals. And we kind of go over a widespread of different topics in real estate, like the pros of why you should buy single families versus multifamilies, competition, and really just the barrier of entry between each respective type of investment, and how financing works from a small scale of single families and then comparing that to duplexes, triplex, and even multi-units beyond 30 units at a time, and kind of how that loan process breaks down really at a high level. And we just go over the experience that each of us have and how we can benefit from that relationship. So I hope you do like that video. Please note though that this was our first time recording as a group, so I did notice that the audio quality was not up to par as how I would have liked it, so we will continuously find ways to improve that, so the content for you guys is always outstanding. And you know, this will be something new that we're trying out, so we're gonna get a feel of how it turns out at the end of the day. And actually the topic or the video was supposed to only be 10 minutes long, and we ended up going over an hour long, so we had to cut it short because all of us just have so much experience in it, and really that's something that all of us are passionate about. So when we get into something that we really enjoy, the time just kind of goes out the window because we just have that experience and we really do just enjoy talking about it. So I hope you also find this information valuable. This is just real, true information of us having a very relaxed conversation of what we have experienced with real estate. Please let me know in the comments below if you liked it and if you would like to see more videos like this, and if there's anything specific you would like us to go over. We may be going to do more videos like this, probably bi-weekly. Let us know if you guys do want to see that. So stay tuned for that video, and we should be starting right now. See you around, guys. Bye. Okay, here we go. 3, 2, 1. Hey, what's going on, guys? This is the multifamily investment video where we are going to be talking about real estate, differences between single family homes and multifamily complexes. My channel is under the Growth Mindset channel. We talk about personal investment, finances, and really just finding ways to achieve financial freedom. And we have two other guests in this video.
Hey guys, yeah, my name is John Wires from Boulder Creek Investment. We have James Gregg here also.
What's up?
Looks like we're going to run this on a conversational format, and we're going to run through the topics. Hey Michael, did you want to talk about the topics we're going to talk about today?
Sure. We're going to go over inventory, so the competition between single family homes and apartment complexes, and what you really have to understand between those different real estate investments. And then there's also a barrier of entry, so knowing how to get into a deal and actually make that happen, crunch the numbers, who to contact, how to network, how to close. And then going with that, how you're going to actually finance a deal. So then, you know, after doing your research, you actually make it happen and get those deals under your belt. So it's going to be, you know, very informal conversation of us just talking about our experiences with real estate, and then hopefully it's entertaining along the way.
What we could do is we can start a little bit about some of our background in what we're investing now and what experience we have, residential, single family, duplex, and commercial. Do you want to start off, Michael?
Yeah, sure. So I have done primarily single family home investments. I've done partnerships with other investors where we, one of the deals we did was rehab, and then we sold it out to another investor to buy. And that was really my first deal to get involved in real estate. I partnered, and then I kind of came in with a negotiation where I would pay closing costs and down payments, and we would split profits around 50-50. And really that was more for me to learn how to do real estate because I didn't have experience. So my way of providing value was providing money, and then just the desire to learn. After that deal, then I kind of knew the motions of how to get this process going. And then I started doing deals on my own. And those are primarily with single family homes. My focus primarily is to build passive income. So I'll find
or I'll look for properties that need to add value. And then I'll buy that because it's usually going to be under the appraisal value when you do make that purchase. I'll buy it, I'll rehab it, and then I'll try to refinance it, making sure the cash flow is still net positive with your reserves in place for hiccups along the way. And then I'll rent it out long term. And that's really allowed me to build up a vehicle for passive income that will continuously snowball and grow as over time, because you can find different ways of how to leverage off of your current assets to keep doing that process over and over again. So I have mostly experience with single families, but I'm curious on how like apartment complexes may go, because that's a whole different avenue I've never done before. And you really do need a team to take those bigger deals down. And that's also what I'm curious about, just different avenues. Like there's a lot of vehicles to make passive income. It's just finding the way that you understand, that you know and you trust doing, and then actually going out, taking the steps and making that stuff actually happen.
How about James? You get to go next.
Nice. Yeah. So my background is well, like Michael, I've got some background in single family. I did some ground up construction, did some flipping for a while, flipped a half dozen houses a couple years back. But I've also done some commercial real estate appraisal, so I'm very familiar with the valuation of larger properties, but less familiar with the owning and operating. So I'm starting to move into that space right now. I'm working on a 29-unit deal with one of our other business partners at Boulder Creek, and then also working with John right now on a larger acquisition, 100+ units down in Oklahoma. So starting to get our hands into those bigger things, starting to apply some of the lessons that we've learned. But that's kind of where I'm coming from.
Yeah, sounds good. And we all kind of started with the smaller single family or duplex or even fourplex properties. That's what I started with myself, did all the management, marketing. It was lower income stuff because it was cheaper. It was real close to the 2007, 2008 type crash that we had. So I've had plenty of renovations, rehabs, dealing with tenant issues, everything like that. It was fun, but after 12, 13, 14 years of that, I think it's time to definitely move on to the commercial side, where you can justify a property manager. You just need the number of doors. So I think that's kind of what we're here today to talk about. Obviously, the pros and cons of each side, because there are paths for the single family side where you might have an investor who has the right opportunity and they have the right time in life to invest in something smaller like that, where they might want to get their hands wet. But at the same time, we're looking into the commercial side stuff where we can scale opportunities, have economies of scale, and some other commercial benefits. Michael, do you want to start with maybe doing the inventory, your opinions on what's out there for supply on single family homes?
Okay. So single families are obviously a lot smaller and cheaper than big apartment complexes. So there's a lower barrier of entry. Like if you have an income source or a W-2 or a savings account and a decent credit, you could probably close on a single family home. So I think that does open up a lot of opportunity for a lot of other investors to get in. And so that does mess with your competition a little bit in terms of what you're trying to find. And because of this, prices may go really high depending on the market, especially like right now and for 2019. I've seen, like, even in the past 2 years, prices of homes that should have costed like 50K or around 75K, and that's not even rehabbed. So like the numbers aren't really lining up like with what I'm seeing for investment choices. And I think that's mostly because there's a lot of hype and there's a lot of people involved, and many people can get their hands into those type of deals. If you go, like, let's say if you're trying to go into an apartment complex, obviously that's a totally different game field, a lot of different other requirements. You have to have credibility, funding, a lot of things. The type of people that go into those deals, you probably already have a background in, or you have someone that has experience with it and they can help you leverage that knowledge to actually get in those deals. And so you're also, there's going to be less apartment complexes than single family homes, of course, because that's, people live in homes and typically not apartments at a large scale for the nation. But you're going to see also like a different level of knowledge and experience that go along with it. And for me personally too, like when I've been talking to other investors, I will usually, most of the time, I'll hear someone say that they've gone to single families, but then they go up to multifamilies, and that's kind of their angle because it is a lot easier to manage. Like if you have one property with 100 units, if you have 100 single family homes, like that's extremely hard on their taxes.
You're
You have
busy.
to, you're very busy. You're probably getting phone calls from your management company you thought you weren't supposed to get because you hired a property management company, but there's going to be hiccups that they need, the investor to take ownership on and actually give recommendations to. So I think if there's a way to fast scale into the multifamily world, you're probably going to save yourself a lot of headache. It's just really trying to get into that barrier and get involved with it to kind of accelerate that process.
One thing you were talking about there, Michael, you're talking about, I'm going to say maybe less educated money going into and chasing the same deals that you're chasing. So you probably have a return requirement that you want to hit.
Sure.
It's probably get in, get out, get your money refinanced out so you don't have any money or very little money into a deal. I think it's interesting because on the multifamily side, I'm seeing some of the similar things. Like I'll see some operators talk about our minimum IRR, internal rate of return, is whatever, 20%. Like we're not going to look at a deal if it's less than that. And then I'll hear other people, maybe they've got a different investor base or something like that, and their minimum IRR is 12, 15, 16%. So I'm not going to say it's dumb money. I'm not going to say it's less educated money, but it's just like a different return set.
Sure.
So on the one hand, less competition for those bigger properties, but like there's still that shift in how much money do you need or do you want to make, and it kind of influences inventory and availability and stuff.
Right. I mean, even too, like I guess even just properties in general, like you're seeing a lot of outside investors buy into different markets, and that just raises the price up even more. So
Yeah.
especially for where we're located, it's a lot of heavy outside investors coming in. So makes it hard.
we all know that because we attend a monthly meetup, the BP investors meetup, and we see a lot of people obviously coming from California, some from Seattle, some from New York. I don't know where else you guys have seen them, but they're definitely here for the yield, and they are making it complicated for us. But I don't know. At the same time, I think they've kind of even starting to overlook Kansas City because it is starting to heat up, and they're starting to hit up other places. I've heard a lot of people are trying to get back into Detroit and some of the more rundown places. But there's always a time and place, or they're maybe hitting St. Louis up. So it just depends on your risk levels, obviously. But yeah, there's definitely a lot more inventory of the single family versus commercial. There's also, I would say, less emotion involved in the commercial side, which is nice. Now, don't get me wrong. I always tell people there is a little less competition on the commercial side, but don't think that you're going to be able to pick up a 50, 100 plus, unit very easily. We could definitely contest to that because we had competition of, 15 or 16 bidders on this 114 unit in Oklahoma City. So there's definitely not a shortage of people with millions of dollars, but it's definitely less emotional. That's for sure. So when I stopped looking at residential stuff a couple years ago because, like, Michael's saying, all these podcasts and all those gurus on the internet have made real estate a popular place for a good reason, but unfortunately, once everybody's had a piece of the pie, there's not much room for everyone to get in. So it is definitely tougher. So I think, scaling into these larger properties where it's more by the numbers, you have more buying power, economies of scale, benefits like that. I think that's where you're going to get some more value nowadays. But don't get me wrong, there's deals being done every day on the single family side, but you got to be well connected and you got to grind, I think, that much harder. We could talk about barriers of entry for our topic here. I know you guys have worked with more single family than I have. What do you see good? Obviously, there's less of a barrier entry for the single family side.
Yeah, there's about this much barrier to entry.
Yeah, and you could see it because there's new people showing up at the meeting every day to getting into it. Because I mean, if the average person can find a real estate agent or to buy your own home, it's similar to buying a single family home for rental or a duplex. They're still all on the residential side, even though agents can do commercial too. But duplexes and fourplex are still residential.
Especially if you're willing to house hack, FHA loan, extremely lenient guidelines there. Get a 1, 2, 4 unit for 3.5% down. I mean, the barriers to entry is like fog a mirror, $50 in your pocket, and I mean, you can get an investment property.
Right. And I mean, I house hacked myself in a duplex. So, used the other half as a rental and was the property manager there. A lot of people are even Airbnb in their basements or extra rooms. So, and I think it's fun that technology on the internet has really made it convenient too, for the smaller guy to get into it, especially with all these podcasts that are going every day of showing you how to get into real estate investing.
Yeah, even like people that they've owned their own personal house for a long time, they look into Airbnb and then they can just turn in these empty rooms that they don't use anymore into short rentals, really.
Right.
Just providing some cash flow because you're not using that opportunity cost of not even renting it out. So there's a lot with that. I actually met a guy that he lives on the streets and he owns rental properties. So
interesting.
Yeah, he said he was real estate investing. I couldn't figure out how he was on the streets, but we'll probably have to feature him sometime on this show.
Yeah, we may have to. He'll probably have to
take a shower.
Use your computer.
Maybe he could Skype from his phone or something.